Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. This morning's CPI data came in stronger than expected. Now we're looking at the core read most closely, 2.1% versus 2.0 expected, and then the month-over-month read, strongest since January 2018, came in at 0.3. So what you're seeing here is a more muted reaction than we would imagine in equity markets. It signals that Fed Chair Powell's comments yesterday and today ultimately were really supporting this market. The Fed is planning on cutting later this month. However, we're starting to see some of the odds for a 50 basis point cut start to trickle out a little bit, and they reach nearly 30%. Now, we do expect to see that 25 basis points. It's getting that and then what we see going forward. But if inflation continues to grow and it starts to poke its head, then that's going to really start to curtail the Fed's path of cutting. So right now, those stocks are holding very well. There is a lot of technical momentum behind this market right now. That's really the important thing to understand. We've said yesterday and through today, out above that 29.90 level, path of least resistance is higher. We still need to see the ultimate breakout on a closing basis. That's above 3,003, so keep an eye on that. The NASDAQ almost did it. We have our level 79.30. We want to see it close out above there. Overall, we're holding out above there pretty much in the NASDAQ right now. Now, the Russell did pull back just a bit, hit the 50-day moving average, starting to pare some of those losses. But as long as the S&P really stays out above 29.90 and the NASDAQ out above 7,900, you're going to see the buyers try and buy this thing through the rest of the day. So watch those levels. And again, the path of least resistance is higher. However, fundamentally, the CPI is something you don't want to ignore, but the market is seemingly doing so for now. With crude oil, OPEC monthly report, nothing really moved the market too much there. You are seeing a continued bid, bullish EIA data yesterday, but then you have a little bit of attention with Iran that's picked up here with Britain. Starting to see some of those reports. You see where it takes you into the weekend, but it is keeping a bit under the market. We are in technical breakout territory, though. We've talked about that in the Morning Express. Path of least resistance right now is to about 61.5. Our upside target is above there, so keep an eye on that. It's on the Morning Express. And then lastly, looking at gold, out above 1408. We got that yesterday, and that's support now. So as long as we're above 1408, it is in a nice path of least resistance higher mode, but it's really, we're not as bullish as we were yesterday, and we described why in the Morning Express, because we did test major 3-star resistance at 1432. This is a tradable market. The market seems to be range bound for now. That range, wide range, about 1380 to 1440, but we have not closed out above 1432, and yet in this overnight move was another failure there. But can we have a constructive pullback? That's what matters here right now. So we did neutralize our bias just a bit in gold because of that test at 1430. It's a tradable range. Give us a call, though. We're here to talk about anything on the board, 312-278-0500. You can email us, info@bluelinefutures.com. You can check our website for updates, sign up for a free trial research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks a lot.